Hi believers, this is Amit from Waya team, and I'm here to provide a weekly update and the road ahead in the markets. The major highlight of the week include FIIs investing close to 15,200 crore, fueling a broad-based rally as the market anticipates the US Fed cutting the rate next week. The Nifty 50 hit new highs. Bank Nifty also up by 2.7%. The mid-cap and the small-cap indices gained 2.8% and 1.2% respectively. The US Fed meeting in the coming week will be crucial. The consensus is for the 25 bips rate cut, though some market participants are speculating a more aggressive 50 bips cut. A rate cut would be a significant positive trigger for global markets, particularly for emerging markets like India, as it would likely result in a weaker dollar and increased foreign inflows into Indian equities. If the Fed cuts 50 bips, it will be important to understand why such a large cut was made in one go. Note that a 25 bips cut has already been priced into the market with the recent rally. Technically, the Nifty 50 formed a strong bullish candle on the weekly time frame, completely recovering the past week losses, indicating a continuation of the uptrend. Going forward, we expect the index to sustain its upward trajectory and gradually head towards 25,800, while key support is placed at last week's low of 24,800. We continue to recommend a buy on dips approach. We anticipate following based on our macro analysis. Private banks are showing signs of strength. They are likely to steer the Nifty 50 higher. Sectors like BFSI, IT, metals, consumption, and real estate, which are sensitive to interest rate, are expected to outperform. Any rate cut will be very positive for these sectors. FIs have been net buyers in 4 out of the past 5 sessions. We expect more FI money to flow back into emerging markets. This is much positive with already robust domestic liquidity. Retail inflation in August inched up slightly to 3.65% from July's reading of 3.6%, mainly due to high food prices. However, the inflation has remained within the RBI's medium-term target of 4%. Crude oil prices continue their downtrend after breaking down from one-year consolidation. We expect prices to head towards $67 per barrel over the coming months, with upside capped at $80. This trend will help keep inflation in check. Coming to an interesting observation from the past few weeks, new age tech stocks such as Zomato, Mamaearth, Policybazaar, Zaggle, Cartrade have lately generated buzz among the investors, especially after significant volatility following their respective IPOs. Investor sentiments towards these stocks has improved as the valuation are now more attractive compared to the time of their IPOs. And new age companies have shifted their focus towards cash flow and profitability rather than merely chasing revenue growth. We prefer stocks like Zomato and Policybazaar for long-term investments as they have turned around their operations for more profitability. Key takeaways from today's update. The upcoming rate cut cycle in the US will determine the outlook. Sector rotation will continue with IT, pharma, and BFSI making a comeback. We recommend to focus on buying on dip strategy and staying invested to capture long-term benefits. That's all for today. Wishing you a happy trading week ahead. Thank you.